Fran, thanks very much indeed for joining me. Do you think you could tell me a little bit about fallen angel bonds and the investment opportunities that they may offer?
Sure, Tom, and thanks for having me. Let's start with the technical definition, what a fallen angel bond is. And fallen angel refers to a bond, not necessarily an issuer or a company, but fallen angel bonds were issued originally as investment grade bonds. Subsequently, they've been downgraded to sub-investment grade by ratings agency standards BB plus or lower. Fallen angel bonds then tend to be issued by companies that might be more well known than some of the original issue high yield borrowers in the market. A few examples of the companies whose bonds are fallen angels today include Sprint, ArcelorMittal, Nokia, JCPenney, etc. In terms of the opportunity they present, what happens when an issuer's bonds are being downgraded? Typically it means that the business is suffering in some way, shape, or form, either from a balance sheet perspective or perhaps a loss of revenue or market share that's causing some stress on their ability to pay their debt. But the bonds are falling from BBB to typically to the BB category. But you've got companies that generally have a well-known brand, maybe a larger equity market capitalization than an original issue high-yield borrower. On average, they tend to have a much higher equity capitalization. In many cases, because of the nature of their business, their long history, their brand, and also the way their debt was originally structured. Investment-grade debt tends to be much longer in maturity. Fallen angel borrowers may have greater flexibility to re-strengthen their balance sheets. They may have valuable assets that have market value. They may have longer time to maturity for a good part of their debt and a greater ability to navigate around that. They also tend to have a higher incentive to regain their investment grade status than many original issue high yield borrowers may have. They're not necessarily high growth companies who expect a high cost of capital. They count on that low cost of capital that an investment grade status brings, and they will be highly incentivized to return to that.
How big is this market, and what's the average credit quality of it relative to the broader market?
Fallen angels represent about 12% of the broad high yield market in terms of size. So between 150 and 200 billion outstanding today. That can change over time depending upon the credit cycle. In terms of credit quality, at least with regards to ratings, so credit quality as per the ratings agencies, the fallen angel universe tends to have a much higher percentage of BB rated credits. At the end of 2015, over 80% were rated BB minus or higher on average by the credit ratings agencies versus about 48% in a broad high yield market in that BB minus and higher category. It's important to note, I mean, the opportunity that fallen angels present or any credit story comes with risk. So not all fallen angels stay in that BB category. As I said, over 80%. Which is much higher than a broad high yield market. But some do continue to descend to single B. There are some defaults in the fallen angel universe as well. However, over the 12 years of history that there's been an index tracking this universe, fallen angels have outperformed the broader high yield market. They've also had a lower default rate and a higher propensity to reascend to investment grade. And it's in that area, in those areas, and like historically, that suggests an opportunity in fallen angels.
Fran, could you tell me a little bit about the performance of fallen angel bonds?
Yes, the fallen angel index that has been around for a dozen calendar years now has outperformed the broader high yield market 9 out of the 12 calendar years that it's been in existence. While that's obviously not a forward-looking statement, it does suggest that some of these fallen angel characteristics have proven to lead to some impressive returns relative to the broader high yield market.
How would you characterize investing in fallen angel bonds?
Buying fallen angel bonds or investing in a fallen angel type product is really two things. Again, it's gaining access to the sub-investment grade bond universe, buying high yield bonds. But as we discussed, it's buying on a higher credit quality portion of the high yield universe, that much higher double B component traditionally. Additionally, the whole dynamic of these being issuers, fallen angels being bonds of issuers that have been downgraded or experienced a series of downgrades, their bonds tend to have lost a decent bit of value by the time they become fallen angels. In a way, then, fallen angel investing is a contrarian strategy. You're buying bonds that have crossed over from investment grade to high yield, and which typically have seen a lot more selling than buying in the months leading up to that.
And VanEck has a fallen angel bond ETF?
That's correct, Tom. That's one way to access the fallen angel universe in a pure way. I mean, only fallen angels through ANGL, which is the VanEck's fallen angel ETF.
Fran, thank you very much.
My pleasure.